Hello and welcome students. In the last video lecture, I had completed chapter number 6, that is retirement or death of a partner. Now in this video lecture, I am going to start with the last chapter of first part of accountancy, that is dissolution of partnership firm. Now what is dissolution of partnership firm? Let us understand it with the introduction. So far, we have undertaken the study in context to continuation of business in spite of changes in partnership due to admission of partner or retirement or death of a partner. It means, students, we have already understood that due to the admission of a new partner or retirement or death of a partner, in spite of any of these changes, the business or the partnership continues. This brings to the end of a partnership. It means new partnership takes place. Due to the admission of a new partner, the new profit and loss sharing ratio and the new partnership comes into existence. But it is not the dissolution of a partnership firm. Ultimately, the firm doesn't get dissolved. It is just the end of the old partnership and the new partnership takes place due to admission or retirement of a partner. But the entire firm doesn't get dissolved. But today we are going to study the topic in which the entire partnership firm gets dissolved. Okay, so the partnership firm and partnership automatically comes to an end when the current business is closed and all partners get separated. So in case of dissolution, the old partnership and the partnership firm and even the partnership amongst the partners automatically gets dissolved, comes to an end due to the end of the current business. We will study the transactions related to dissolution in this chapter. So we are going to study in this chapter the transactions or the journal entries related to dissolution of partnership firm. Okay, now first of all, understand what is meaning of dissolution. Dissolution means end of existence. It means previously whatever the partnership firm that we have prepared as per the Indian Partnership Act 1932, now that partnership firm comes to an end. The business gets closed down or shut down. So that is called the dissolution, end of existence. Here dissolution is to be studied in the context of dissolution of partnership and a partnership firm, where two issues are considered for dissolution. It means dissolution of partnership firm and dissolution of partnership. Okay, so let us understand what is the difference between dissolution of partnership firm and dissolution of a partnership. When a partnership firm closes down its business on a permanent basis or a firm becomes non-existent from legal point of view, it is known as dissolution of partnership firm. It means if the business gets closed down permanently, then it is known as dissolution of partnership firm. In brief, when a running firm is closed and its business activities are closed, it is dissolution of partnership firm. It means the business which was running on previously, now that business is closed down or its activities are closed or stopped, then it is called dissolution of partnership firm. Next point, that is dissolution of partnership. When except one partner, all partners get separated from a firm, this is also an end of a partnership. Suppose there are three partners in a partnership firm and two partners get separated from the business or from the partnership firm, then this is also a situation of end of partnership, because now only one partner has to run the business, and so that individual becomes the owner of the business, and that type of business unit is called sole proprietorship firm, not the partnership firm. So he will continue as one partner or single owner of the business as a sole proprietorship firm. In this case also a partnership firm gets dissolved. So ultimately the partnership firm gets dissolved, but the business doesn't get stopped. It is continued by one of the partner who is the single owner of the business from now onwards. Okay. When running business of the firm is sold to a joint stock company, this is also a dissolution of partnership firm. Just as when there are three partners, if two partners retires or if two partners are separated from that partnership firm, then the single partner continues the business. So that becomes now a sole proprietorship firm. In the same way, if the running business of the partnership firm is sold to a joint stock company, then also there would be the dissolution of the partnership firm and it will be converted converted into a joint stock company. Okay, so that is the example, or that is the explanation of dissolution of partnership. So both are different terms, dissolution of partnership firm and dissolution of a partnership. Okay, next one, dissolution of firm and partnership. It is essential to understand the meaning of firm dissolution and partnership dissolution, which is as follows. First one, that is dissolution of firm. As per section 39 of Indian Partnership Act, when all partners get separated through dissolution of firm that brings end of their partnership, it is known as dissolution of firm. It means when all partners are separated through the dissolution of firm, then that is called the dissolution or end of the partnership firm. In this manner, when partnership is dissolved and closed down the firm, it is dissolution of firm. In that case, the business of the firm is closed down completely, and due to that, the liabilities at the end of the dissolution is being paid out, and the assets are being realized, or the sale of assets is being realized from the whatever the realized value of the assets, the liabilities are being paid out, and from the remaining surplus, if any is remaining, then the capital of the partners is to be redeemed as per their contract. Okay, next one, that is dissolution of partnership. When business is not closed down due to retirement or of a partner, death of a partner, insolvency of a partner, or due to any other reasons, and remaining partners keep the business continues, then it is called the dissolution of partnership. It means when business is not permanently closed down due to if there are three partners, and out of that three partners, if any of the two partners retire, or death of a partner takes place, or any of the partner is declared as insolvent, so due to any of the above reasons, the remaining partners, suppose there are remaining one or two partners, that partners continues the business, then that is not the end of the partnership firm. It is the dissolution of the old partnership only. Okay, so these are the two important points, that is dissolution of firm and dissolution of partnership. Okay, after understanding the dissolution of partnership and dissolution of firm, let us understand the difference between the two, that is difference between dissolution of partnership and partnership firm. First of all, the main point, that is meaning. What is the basic difference between dissolution of partnership and dissolution of partnership firm? Reorganization of partnership means dissolution of partnership, and permanent end of partnership firm is dissolution of partnership firm. Reorganization means due to death or retirement or due to admission of a new partner, there are many changes taking place in the internal structure or organization of the partnership. So due to that, there would be reorganization in the partnership firm, then that is called dissolution of the old partnership, and the new partnership comes into existence. But in case of dissolution of partnership firm, there is permanent end of partnership firm in case of dissolution of partnership firm. It means there will be no any new reorganization would take place in case of dissolution of partnership firm. The business would be closed down permanently. Next point, that is existence of firm. The existence of firms remain continuous. There is end of existence of firm. We had already discussed that in case of dissolution of partnership firm, the business completely closed down and there is end of the existence of such type of business unit. But in case of dissolution of partnership, the existence of firm remains continuous. It means if there are three partners, and if one of the partner retires or his death occurs or declares himself as insolvent, then it doesn't make that the remaining two partners, that the business gets closed down. The business will be continued by the remaining two partners of the partnership firm. So it will not be closed down. The business continues. The existence of the firm continues in case of dissolution of partnership. Okay. Third point, that is books of accounts. Books of accounts remains continuous, but naturally if the existence of the firm is there, then the books of accounts will also to be maintained. In case of dissolution of partnership firm, the existence is ending, so the books of accounts are not required to be continued, they are to be closed down. Next one, settlement of accounts. No accounts are settled, but profit or loss arise due to revaluation is credited or debited respectively to partners' capital account. Generally, accounts of outgoing partners are settled. No accounts are required to be settled because the business is to be continued. There is just a change in the construction of the business in the partnership. Due to admission or retirement of the partner, we have to prepare the revaluation account, and profit or loss that is arised in the revaluation account that we are crediting or debiting to the partner's capital account. So in case of dissolution of partnership, we are just preparing the revaluation account, but in case of dissolution of partnership firm, the accounts are settled down through realization account. In case of dissolution of partnership firm, we have to prepare realization account, and in case of dissolution of partnership, students, we have to prepare revaluation account as we are preparing in admission and retirement or death of a partner. Okay. So in case of dissolution of partnership firm, we have to prepare realization account in order to get the realized value due to sale of the assets, and from that realized value we have to make the payment of the liabilities, and if after paying the liabilities, if any surplus remains, then the partners are being paid out according to their profit and loss sharing ratio. Okay. Next one, that is interference of court. It is voluntary dissolution of partnership. It means if any of the admission of a new partner takes place, or if any of the partner retires, then in that case, that is the voluntary decision of all the partners of all the existing partners of the partnership firm. So that is completely voluntary. So no need of any kind of interference of the court in case of dissolution of partnership. But in case of dissolution of partnership firm, if required, then court may interfere. Okay. Next point, last point, that is effect. There may not be dissolution of firm due to dissolution of partnership. It means due to dissolution of partnership, due to admission or retirement of any of the partner, the firm doesn't get dissolved. Okay, it continues. The reorganization of the firm takes place. In case of dissolution of partnership firm, there is automatic dissolution of partnership when partnership firm is dissolved. It is natural that if the business comes to an end, if the existence is stopped, then naturally, automatically, the partnership also comes to an end. Okay, so these are the points of difference, and this may be asked in the examination in the theory question of 3 marks. Now students, before moving on ahead, I would like to say you the weightage of this chapter in the board examination, that is of 8 marks. One question is asked for section A of 1 mark MCQ, and one question of 1 mark that is asked from section B to write in 1 line, and 2 questions of 3 marks that are asked in section C of this chapter. So no any big questions are asked from section D, E and F from this chapter. Okay, so this chapter ultimately carries the weightage of 8 marks in the board examination, that is 1 plus 1 plus 3 plus 3. It means section C, 2 questions each of 3 marks. So 3 plus 3, 6. So 6 plus 1 plus 1. That's why total 8 marks weightage is of this chapter in the board examination. Okay. Now moving on to the next point, that is dissolution of partnership firm. Now how the dissolution of a partnership firm takes place. In this chapter we are concerned of the topic that is dissolution of partnership firm, not with the dissolution of partnership that we have already studied in the previous chapter, that is admission or retirement or death of a partner. Okay. Now moving on with dissolution of partnership firm. In this chapter we will undertake study of important aspects of dissolution of a partnership firm. Subsequently we will undertake study of accounting treatments for the dissolution of a firm. So what would be the accounting treatment in case of dissolution of partnership firm that we are going to study in this chapter? First point, that is A, methods of dissolution of firm. What are the different methods for dissolution of firm? Second one, that is legal and other provisions for accounting settlement of dissolution. It means what are the legal steps or provisions that we have to follow at the time of accounting settlement or at the time of settling the accounts of the partners in case of dissolution of partnership firm. and last, that is procedure of dissolution. So we are going to study these three topics in this chapter. Okay, now let us move on with the first part, that is A, methods of dissolution of firm. There are basically two methods as per the Indian Partnership Act 1932. That is, first one, normal dissolution or dissolution without interference of court, and second one, that is dissolution by court. It is understood that first one, that is normal dissolution by the mutual understanding amongst the partners, and there is no interference of the court, and the second one, that is by the interference of court. Okay, first one, that is normal dissolution or dissolution without interference of court. Through any of the following methods, partnership can be dissolved without the interference of court. It means there are few methods in which the normal dissolution takes place of the partnership firm without the interference of the court. So let us study that methods of dissolution without the interference of court. Okay, the first method, that is there are total 5 methods of dissolution without the interference of court. The first one, that is by agreement. When all partners agree to dissolve the firm, partnership firm can be dissolved at any point of time. It is voluntary dissolution. It means all the partners willingly decide and they are having the equal opinion of dissolving the firm. Then the partnership firm can be dissolved at any point of time. It is totally voluntary dissolution. That is by the agreement and mutual understanding of all the partners. The second type of dissolution is dissolution as per contract. Dissolution of a partnership firm can be done on the basis of predetermined contract between the partners. It means while starting such type of partnership firm, the partners had internally decided or had agreed or has signed a contract that on the fulfillment of 1 year or 2 years or 5 years, or at the end of the fulfillment of certain particular targets, if they would have decided to dissolve the firm at a stipulated time period, then as per the contract, the dissolution of the partnership firm takes place. Okay, so in these cases, the interference of court is not required. Third situation, that is dissolution as per act. In the following conditions, there is compulsory dissolution by the act. When all partners of the firm become insolvent, or except one, all partners become insolvent. It means when all partners declares themselves to be insolvent, or if there are 3 partners, so out of 3 partners, 2 partners declares themselves as insolvent and 1 partner is able to continue the business. So in any of these situations, the dissolution as per the Indian Partnership Act, the dissolution of the partnership firm takes place. Okay, so that is as per the act. Next one, when business of firm becomes illegal, it means previously for which purpose they had started the partnership firm, they are not stick to their business and they start some illegal business, then in that case the dissolution of partnership firm takes place as per the Indian Partnership Act. Next one, that is fourth point, dissolution on happenings of certain contingencies. If constituted for a fixed term, suppose by the they have decided to start the partnership firm for a fixed period of say for 5 years while starting the business, then on compilation of that 5 years or that stipulated time period, automatically the partnership firm comes to next to existence. It means it will be stopped. It will be not be continued as a partnership firm on the expiry of that time period. Okay. Next one, that is B point. If constituted to carry out specific aim by the completion thereof. It means for specific target or to complete specific contract or to compilation of a specific consignment, that specific targets or specific goal has been achieved. Till that time only, if the partnership has to be continued, then on compilation of that specific aim, the partnership automatically comes to an end. So there the dissolution of the firm takes place. So these are the situations in which the court is not required to interfere. Next, fifth point, dissolution by notice. Where the partnership is at will, the firm may be dissolved by any partner giving notice in writing to all the other partners of his intention to dissolve the firm. It means if any one of the partner is willing to dissolve the firm, then he may give a notice in writing to all the other partners to show his intention to dissolve the firm. The firm is dissolved as from the date mentioned in the notice as the date of dissolution, or if no date is so mentioned, as from the date of the service of the notice. So the firm will be dissolved from the date when the notice is being given to the remaining partners, and if date is not mentioned, then from the date of the service of the notice. It means the day from which the notice has been provided to the remaining partners, from that date onwards the dissolution of the partnership firm takes place. So that is by the notice of one of the partner to the remaining partners of the partnership firm. Okay, and so these are the 5 points in which there is no interference of the court. Again revising that 5 methods. First one, that is by agreement, internal agreement or mutual understanding between the partners. Second one, that is dissolution as per contract, as while starting the business only they have decided to end the business immediately after on fulfilling of the specific contract, so automatically the firm will be dissolved. Next one, that is dissolution as per act, that means if any one of the partner or except one of the partner, all the other partners gets insolvent, or if they are involved in any kind of illegal business, then the dissolution of the partnership firm takes place as per the Indian Partnership Act. Fourth point, that is on happening of certain contingencies. It means any kind of consignment, or on the expiry of a specific time period they have decided to end the business, then the firm automatically gets dissolved on the expiry of that time period. Okay, and the last point, that is dissolution by notice. Where the partnership is at will, the firm may be dissolved by any partner giving notice. It means over here, if any one partner is not willing to continue the business, then he may give notice to the remaining partners about his intention to dissolve the firm. So in these 5 cases, or in these 5 methods, there would be no any interference of court while undertaking the dissolution of partnership firm. Now we'll understand the second method, that is dissolution by the court. It means where the court will interfere in the matter of dissolution of partnership firm. Let us understand it. When any partner file a suit for dissolution of a firm on any of the following grounds and the court orders to dissolve the firm, it means over here there is only one partner who is willing to dissolve the firm, and he takes the help of the court on the following grounds in order to dissolve the firm. What are the grounds, or what are the bases on which he takes the help of the court? First one, when any partner becomes of unsound mind. If means any partner who is not in a mental state to act as a partner of the partnership firm, then in that case one of the partner may file a suit in the court and takes the help of the court in order to dissolve the firm. Next one, when a partner becomes permanently incapable of performing his duties as a partner. It means he is not in a position, he may be handicapped, or he may be in such a situation that not acting as a permanent member or not be able to perform his duties as a partner in the firm, then in that case the court will interfere and the dissolution of the firm will take place. Next one, when a partner undertakes misconduct against partnership firm or against business of a firm. It means when any of the partner, his behavior or his dealing with his customers or with any of the other partners is not proper, then it is called, then in that case the dissolution of partnership firm will take place by the interference of court. Next one, when partner willfully and persistently breaches the partnership agreement. Breaches the partnership act means, breaches means violates the laws of the partnership agreement. Whatever the partnership deed or partnership agreement that they have signed, they are not following the rules and regulations of that partnership agreement, is continuously violating the rules of partnership agreement. In that case the court may interfere and the dissolution of partnership firm will take place. Next one, when a partner transfers his whole interest in the partnership to a third party without the consent of other partners. It means suppose there are three partners A, B and C. Out of that, A partner gives his entire share of the partnership firm to the fourth partner, to the third party, that is D partner, without the consent of the remaining two partners, that is B and C. Okay, so over here, when a partner transfers his whole interest, it means whatever his share in the business, he transfers to the third party, that is D partner, without informing the remaining two partners, that is B and C. Okay, so in that case, dissolution will take place by the interference of court. Next one, when a firm continuously incurs losses and is unable to run a business due to loss. It means if the company, if the firm is going on in continuous loss, and such type of business is not possible to continue, in that case, with the interference of court, the dissolution of the firm will take place. Last point, when the court finds any other ground to be just and equitable for the dissolution of the firm other than above 6 points, if any other specific reason that the court may find out due to which the dissolution of the firm may require to take place, then in that case, if a just reason the court is having, then also the dissolution of the partnership firm may take place. So these are the 7 reasons under which the dissolution of the partnership firm takes place with the interference of court. Okay, so up till now we have understood 2 different types of dissolution of partnership firm, that is with interference of court and without interference of court. Now the second point, that is what are the legal and other provisions for accounting settlement of dissolution. It means what are the legal provisions that we have to consider while settling the accounts as at the time of dissolution. Okay, first one, for loss of a firm. As per Indian Partnership Act, the loss arised including capital deficit at the time of dissolution is executed in the following manner. It means if there is a loss for the firm, and then as per the Indian Partnership Act, how to loss arised including capital deficit at the time of dissolution is executed in the following manner. Then how that loss is to be paid out, or how we have to settle our accounts. For that, first priority will be given first of all to be written off from the profit of the firm. It means whatever loss has been occurred to the business unit, first of all that loss is to be paid out from whatever the profit the firm is having, whatever the capital, whatever the profit the firm is having till now. From that profit, first of all the loss will be paid out. Next one, if profit is not sufficient, it means if the profit is not enough to bear the loss, then it will be met from the capital of the partners. It means in case of partnership firm, the liability of the partners is unlimited. So in that case, if the profit of the firm is not enough to bear the losses of the business, then in that case, to pay the losses, the capital of the partners will be utilized. Next one, if capital is not sufficient, then all partners would distribute this loss in their profit and loss sharing ratio and pay from their personal assets as per need. It means if the capital is also not enough to bear or to pay the losses of the business, then all the partners will distribute the amount of loss in their profit and loss sharing ratio, and they will pay it out from their personal assets, okay, according to their profit and loss sharing ratio. Next one, liabilities of a firm and personal liabilities of partners. First one, in case of dissolution of firm, we have to pay the loss of the firm. For paying the loss of the firm, first of all, we have to pay out of the profit of the business. If the profit is not sufficient, we have to pay out of the capital of the partners. And if the capital is not sufficient, then the loss will be distributed amongst the partners in their profit and loss sharing ratio, and they will pay from their personal assets as per the profit and loss sharing ratio. Next one, when liabilities of the firm or personal liabilities of any of the partners is to be paid. In that case, the liability of partners is unlimited. We already discussed that in case of partnership firm, students, you are knowing very well that the liability of partners is unlimited. Thus, for dues towards third party, partners are responsible individually and collectively. As per legal provision, assets of the firm are used to discharge the liabilities of the firm, and personal assets of partners are used to discharge their personal liabilities. It means to pay off the liabilities, the assets of of the firm are to be realized or are to be sold out in order to pay the liabilities of the firm. Since the liability of the partners is unlimited, after making the payment of personal liability from personal assets, surplus can be used to pay the liabilities of the firm. Since the liability, we are knowing, students, that the liability of the partners is unlimited. So after making the payment of personal liability from the personal assets of the partner, if any of the surplus amount remains of the assets, then that is utilized to pay the liabilities of the firm. It means for paying the personal liabilities, we are selling the personal assets of the partners, and after paying the personal liabilities, if any of the surplus remains of the personal assets, then that is to be utilized for paying the liabilities of the firm. That value or that surplus amount cannot be taken by the partner for his personal use. Okay. Next one, that is partners loan to firm. At the time of dissolution, we have to pay the loss of the firm, we have to pay the external liabilities and personal liabilities of the partners, we have to pay partners loan to firm. Okay, at the time of dissolution, first of all, dissolution expense and then the liabilities of the firm are paid from the realization of assets of the firm. It means what priority is to be given to which purpose. First of all, at the time of dissolution, the first priority is to be given to pay the dissolution expenses, and then the external liabilities of the firm are to be paid by selling of the assets of the firm. And after paying the dissolution expense and the liabilities of the firm, if there any surplus remains, then the loan of partners is to be paid out, is to be redeemed. If after making the payment of firm's liabilities, the available surplus is insufficient to return back loan of more than one partner and nothing can be recovered from partners, in this case the loan of these partners is redeemed in their loan proportion. It means after making the payment of firm's liabilities, the available surplus, whatever the surplus amount, is not sufficient to return back the loan of more than one partner, and nothing can be recovered. It means no any amount can be recovered from the partners from their personal assets. In this case, the loan of these partners is redeemed in their loan proportion. It means according to their loan proportion, the loan of these partners is to be redeemed. Next one, that is loan of partner's wife. Next one, priority is to be given to loan of partner's wife. If wife of a partner has given a loan to the firm from her personal fund, this loan will be treated as a liability towards the third party and will be redeemed accordingly. It means even though she is a wife of the one of the partner of the partnership firm, but she will be considered as a third party and will be treated as a liability and will be redeemed accordingly. If wife of a partner has given a loan to the firm from her personal fund, it is not the business fund, but she has given the loan to the business from her personal fund, then it will be treated as a liability and will be paid out at the time of dissolution. If loan is given from the personal fund of her husband, then it will be treated as a loan of a partner. If that loan of wife is given from the personal fund of her husband, then it will be treated as a loan of the partner. But if it is given from her own personal fund, then it will be treated as a loan of third party. Next point, that is liability of partners. Already known, that is liability of partners is unlimited. If a partner or partners becomes insolvent, solvent partners are responsible to pay the dues of the firm from their personal property. If any of the partner or more than one partner declares themselves as insolvent, then remaining solvent partners have to pay the dues of the firm at the time of dissolution of partnership firm from their personal property, also being the liability of each and every partner to be unlimited. Okay, so if any one or two partners becomes insolvent, then remaining partners have to bear the entire loss and have to repay the dues from their personal property or from their personal assets. Next point, distribution of assets, realization of firm. The realization of asset of firm is paid in the following order. It means whatever at the time of dissolution, the assets of the firm are being sold out. From the selling of the assets, whatever the realized value from that to whom the first priority is to be given for payment, for repayment at the time of dissolution. First of all, dissolution expense is paid. From the realized value of the assets, the first priority is given to pay the dissolution expense. Next one, liabilities towards third parties. It means any of the liability or any of the creditors are there of the firm, or any of the partner or any of the loan of the third party, then that is to be paid out first. Next priority to loan of partners. Then afterwards, finally capital, and if any of surplus remains, then finally capital and balance of current account of partners are redeemed. Even after paying the capital balance and current account balances of the partners, even though if any surplus remains after the payment shown, then surplus will be distributed amongst all the partners in their profit and loss sharing ratio. Okay, so always the first priority from the assets realized value, first priority would be given to dissolution expense. Then afterwards the third party liabilities, third priority to loan of the partners, and then afterwards finally the capital balances and current account balances of the partners are to be redeemed. And after paying all the liabilities and the capital redemption, the if any surplus remains, then it is to be distributed amongst all the partners in their profit and loss sharing ratio. Next point, that is general procedure of dissolution. When a firm is dissolved, at that time all assets of the firm are sold and the payment is made in the mentioned order. We are knowing that at the time of dissolution, whatever the liabilities or the partner's loan or the capital of the partners is to be redeemed from the realized value of the assets. Due to the accounting treatment of dissolution, books of accounts of the firm will be closed. We have already discussed in the difference that the books of accounts will be closed down in case of dissolution of partnership firm. Next one, accounting treatments of dissolution. First one, at the time of dissolution of firm, all assets of firm are sold and liabilities are paid from the realized income. It means at the time of dissolution, by selling of the assets, all the liabilities are paid from whatever the realized income of selling of the assets. If any surplus remains, then capital is to be redeemed. Books of accounts are closed. To incorporate complete procedure, the following accounting treatments are given. Preparation of necessary accounts. Now students, we are going to understand which type of accounts we have to prepare at the time of dissolution of partnership firm. Basically 4 accounts you have to prepare. The first one, that is realization account. Second one, that is partners loan account, if any. Third one, that is partners capital account / current account. Fourth one, that is cash or bank account. Okay, so over here the word realization account we have to prepare, not revaluation account. Revaluation account, students, we are preparing at the time of admission or retirement of a partner. So first of all, let us understand what is realization account. An account which is prepared at the time of dissolution to give the accounting treatment to dispose of assets and payment of liabilities is known as realization account. It means account which is prepared to record the realized value of the assets, and from that realized value of the assets, the payment of liabilities is to be done. To maintain that record or to maintain that account, the realization account is prepared. To close assets and liabilities excluding cash or bank account are transferred. It means whatever the value of assets and liabilities except cash or bank account are transferred to realization account at their book value at the time of dissolution. Subsequently, amount realized from the sale of assets is debited to cash account and credited to realized account. But natural, if we are selling any of the assets, then cash will come in. So debit the cash account, and whatever the realized value or realized value of the assets, that will be credited to realization account. And payment of liabilities is debited to realization account and credited to cash account. Opposite of it, from that realized value of assets, we are making payment of liabilities. So that liabilities will be debited to realization account and will be credited to cash account. the difference of realization account will be either profit or loss, but natural, if there is credit side total is more, then it is profit, and if the debit side total is more, then it is loss. So at the end, whatever profit or loss will be arise from the realization account, that difference is allocated between the partners in their profit and loss sharing ratio. It means whatever the difference arise, that is to be distributed amongst the partners in their profit and loss sharing ratio. If the profit occurs, then it is to be credited to partners capital account, and if loss occurs, then it is to be debited to the partners capital account. To incorporate above mentioned dissolution related accounting treatments, realization account is prepared. The profit or loss of realization account is allocated between the partners, therefore it is a type of nominal account. It is one kind of nominal account because whatever the profit or loss occurs by the realization account, that is to be distributed amongst the partners in their profit and loss sharing ratio. Okay, next one, that is partners loan account. Many times for financial assistance purpose, partners provide loan to the business. It means instead of taking the loan from the third party, it is more convenient and more proper to take the loan from internally from one of the partners. If any of the financial requirement occurs, then any of the partner might have given the loan in the business. At the time of dissolution of firm, partners' loans are repaid prior to the redemption of the capital of partners. It means before paying the capital or before redeeming the capital of the partners, the priority is given to the partners' loan. Thus, at the time of dissolution, partners' loan account are also prepared. So, the second account that we have to prepare, that is partners' loan account, if any of the partner has given loan to the partnership firm. Okay. Third account that we have to prepare, that is partners' capital account oblique current account. Earlier detailed study of partners capital account, current account is undertaken. At the time of dissolution, partners capital is to be redeemed. You are knowing the third priority to make the payment at the time of dissolution after the partners loan is of the capital redemption of the partners. So for redeeming the capital of the partners capital or current account is to be prepared. Next one, that is fourth account, that is cash and bank account. Since firm is dissolved, all transactions are done in cash, but natural, for by selling off the assets, the cash will be realized, and for making the payment, the cash will be given out. So all the transactions will be in by cash or through check or through bank. The cash account is not transferred at the realization account. Except cash or bank account, all the other assets and liabilities are to be shown at their book value in the realization account. All cash receipts and payments are recorded in this account. It means any kind of cash receipt or cash payment. In case of selling of the assets, cash receipt would occur, and in case of paying of the liabilities, cash payment would occur. At last, whatever the surplus is paid to the partners. Journal entries for the preparation of dissolution accounts. Before recording journal entries, prepare above stated necessary accounts. It means before writing the journal entries, we have to prepare the above four mentioned accounts. What are the four mentioned accounts? That is the first one, realization account, second one, partners loan account, third one, partners capital or current account, and fourth one, that is cash or bank account. Next point, that is disclose balances in partners capital account and cash or bank account. It means whatever the balances of partners capital and cash or bank account, that balances we have to show in the concerned account. And disclose balances in partners loan account. If there is any balance in partners loan account, if any, then it is to be disclosed. So related journal entries we have to write for the preparation of dissolution accounts. That journal entries of various transactions that I'll be explaining to you students in the next video lecture. Till then, goodbye. Keep practicing. Stay blessed.